Good evening, all. Ira Epstein with your Metal Market Wrap-Up, your weekly edition for this Friday, the 26th of August, 2022, about 5:20 p.m. I wanted to get this out. I know we're going to get a lot of people that are looking at the markets this weekend, so I didn't want to put it out like I've been doing in the summer on a Sunday. Now that we're getting ready for fall, I'm going to move back to my fall schedule. You'll be getting invites to webinars in September. Special reports will be coming out again. And I'm going to do them this year on stocks, spiders. I'm going to do some ETFs. I'm going to do the futures market. So you're going to get quite a bit more from me. It's all going to be part of our paid subscription for a lot of this. You get a few views in the special reports free during the course of a 52-week period. And then either you're a paid subscriber or you don't get them. And you're going to want to see them because they're going to be important, in my opinion. All right. So what happened today? Well, the event of the day is what we've been leading up to. You know, my experience has been one that I'm proud of. I've been a broker since 1969. I have gray hair. I'm older. I don't pretend I'm one of these young guys for the kids. They'll say, that old man. I am an old man. I'm in damn good shape. I got a good mind going, and I have a lot of experience. Do you? That becomes the difference. A day like today, I know enough, and I've said it all week to my clients. I am scared of going into a day like today. I don't know what to expect. We all know the Fed was going to come out, the Fed chair, and he was going to say that he's going to raise interest rates, all right, that they have to be raised. He did that, but what else did he do? So let's take a look, if we could, and get a picture. Here's the highlights. The central bank's got to show its resolve to conquer inflation. Okay. Does that sound to you like a guy that's going to pivot in the middle of the first end when things are looking like, hey, maybe these interest rates are hurting the economy? That's going to be the argument coming forward. Is he or isn't he? Some people will do as they did this summer and say he won't have the resolve to do it. I think he'll have the resolve because he talked about Paul Volcker. Do you know enough? Remember, I'm an older guy. Do you know who Paul Volcker was? Do you know the environment at that time? Do you know the nightmare this man had to right the U.S. economy? If you don't, read a little bit. He brought him up. I didn't, because he understands the seriousness of the situation. The Fed's going to take forceful and rapid steps to moderate demand, and logic tells you at some point they're going to back off on it. I wish he wouldn't have said it. I wish he wouldn't have said at some point they'll slow the pace. What he meant was they're not going to stop raising interest rates. They may not have to go 75, but they're going to stay with 50s and they're going to stay with the 25s until inflation is beaten back into the genie bottle. But it didn't sound that way, and that'll get some people talking again. The U.S. economy is slowing, and there's still good momentum. It means you can raise rates. Labor market's particularly strong and out of balance, way too strong for where the Fed is going to take it. In other words, the unemployment rate is going up. Plain English. Long-term inflation is still well anchored. You got to take it out of the mud at the bottom of the river. There'll be some pain along the way. Get ready. Some people are going to get hurt. So it lasted just over 8 minutes. He's going to fight. He doesn't want to fall into those traps, and I think that's what you had to walk away with. Now, you may not agree with me as to how forceful I thought it was. I thought it was good with that one part. I think he should have worded different, that they're going to pull back. It could have been, we're going to keep going. Now, whether we keep going with 50 points, 75 points could have been better, or even 25. It made it sound and gave some hope to the people that think, he'll back off at the first problem. Other people came in. You had a 1,000-point decline today if you take a look at the market here in the Dow. S&P down 141. These are the biggest declines since back in June. $21 lower in the gold market. Silver not down that much. 33 cents on a day like today is a mild decline. Copper basically unchanged and platinum down. Hey, how could the base metals hold up if he's saying to you there's going to be pain? Use your head. Bonds and notes went nowhere. Nowhere. This is like a non-event day for them. The range was enough to take your socks off in the bonds, not the notes. And when you go to the fives and so on, the curve yield started doing this again. So that front end coming up, and they're widening it out. At one point this morning, I was so inclined to call my best friends and say, it's trading at 27 to 210. Slam them on. I think they finished up at 37, something like that. In the grain markets, inflation bound. That's not going away. I read the Pro Farmer Tour. Now, I'll read more about it over the weekend. It's not good. Not good at all. You don't have enough corn to make up for the difference of the tightness in the market due to the weather. So when we look at the gold on a monthly chart, how long have I told you you're in the middle of a market that is consolidating? On a monthly chart, it's been this way. You had one spike over it. What was that from? Oh, I forgot. Ukraine. Oh my gosh, I forgot. And from then, it just fell apart. Okay? Now, if it breaks out of this to the downside, I'll be there to tell you about it. And then I think you're going to 1434. I didn't say you're going there. If it breaks out. So far, the market's been holding the brakes and actually, on the rallies, been throwing them back. It's caught in the narrowness of the Bollinger Bands. Learn Bollinger Bands. Then we come to a weekly close-only chart. I use these because on a weekly basis, I want to know what the bigger bias is. And on a close, we haven't been over the 18-week average of closes since back in the end of March, after the Ukraine situation. Once you got under it, you never looked back. So that was not the situation that could pick gold up. When we look at a gold chart, there's nothing friendly on the chart. You have a pattern of lower highs, lower lows. To me, that's bearish. You have layers of resistance now that have formed with the new crossover. What is a crossover, by the way? So if you and I come to this together, let's look at the green and the red number. I'll come back one more day. The green is underneath the 18-week average. Here you go attacking it. Now, you're getting right this week, and this was the week of August 12th, it crosses under. My theory is when you cross under, the market should be making another attempt at lower and lows, potentially down there, believe it or not. Here you go. Here you go. So that's what you're doing. We'll see if that happens or not. This happens to be because the 200-day average is here and going to lift when we reopen on Sunday night. It's the way the math is going to work. What's going to happen is I look at the chart, you may not get back to that number because it's going to cross right over it. Where's that darn Bollinger Band? Oh my gosh. These two are coming together. So if, and that's the big word, if you can get the break, this is where I think the pros will be covering the shorts. Now, what if you don't want to get there? What would turn the chart friendly? I'll give it to you in a nutshell. You got to get back over 1804.90 because that's over right now the 18-week average. And that's what I'd be looking at. And then you still have the resistance 1824.80. But the swing line, if you didn't break further, would be turned up. So that would be the first sign not to be bearish anymore. I don't know that it's a bull sign, but it would be a sign not to be bearish. Then slow stochastics. Okay, they're not pointing up or down. They're sort of drifting right here. They haven't done anything. Gold-silver ratio. On a weekly basis, you're back to these highs. Not very good. There's nothing friendly of silver versus gold. And when you look at silver, it's classic. All it did, for all purposes, if you want to see this, tell me where you think the resistance might be. You're fighting. You got underneath the 200-day average. Normally, that and the Bollinger Band form a bottom. So staying short under that is generally not good for your health, okay? And yes, in this case, it even fell further than I thought it would. Now, if you get back up to the 18-week average, that's the line in the sand. Let's get there this way. What would be the resistance? Right there. So now you have an outside week to the downside, and you get follow-through. So what would negate the downtrend? Ideally, if you can't take out the 1800 level and you got back over 2087, this is the bigger picture, you'd have higher lows, higher highs, calling for wherever these numbers come in. It's also a spot that the pros want to go short against. On the first challenge of it, they'll say, well, why wouldn't I want to be short against those two averages? So there's nothing on this chart just yet that tells me that the bulls are going to step in and try to do anything. In the copper market, the bigger picture, this is a bear market rally on the weekly chart into the resistance at the 18-week average of closes, where normally it's going to fight a battle to determine its next direction. It's given you all kinds of reasons not to be short. none to be long on a weekly basis. Platinum is bearish. Lower highs, lower lows. Now, when did the bearishness set in? So if we step together here, it's not this week, it was last week. Lower highs, lower lows. But what else happened? This is the rally as it started unfolding. From what number? If you don't learn how to work with Bollinger Bands, shame on you. You get down to these bands, get up to these bands, they're telling you a story. Your problem is you won't believe it. You won't believe it. You're going to be the most bearish here and the most bullish here. Go back and think about what I'm saying over the weekend. I want to teach you how to recognize this and how at times to stay short and other times to come out of your shorts. It all has to do what's going on with the slow stochastic study. And if it loses its embedded reading, you can't be short anymore. You had to cover something here. If you're only a one lot trader, which you shouldn't be, but if you're only a one contract, you cover everything. You know, you got to trade more than one. You'll tell me, well, when I'm wrong for two. Yeah, but you don't get a chance if you don't do that to catch the bigger trade, because the name of the game is to get on the market's money and cross your fingers to get one of these trades that just run. It happened to you and me this summer when we were looking at heating oil and gasoline, the trades of the year. $20,000 a contract. We were talking in these videos if you got in. I don't know if you got in or not, but that's the play. I certainly wrote about it in my paid subscribers, and I talked about it here. Well, higher high, lower low, neutral number right there. So what does it do next? Comes up. Oh, Ira, you don't know what you're talking about. And all of a sudden, kaboom and kaboom. It doesn't just go to that number and have to stop. There could be slippage, but you're in a zone. Zones are everything when you're trading. And I know you're going to say, because you're a trader, well, I want to be on the money. Zones are the way to play it. Know the number where a trend ends. I agree with that, or the number to take a profit. But entry is about a zone, all right? And it moves during the day. Let's get over here. Let me finish that one up for you. And dollar index. Now, what would you do on this dollar index today? I'm going to repeat. Do you understand Bollinger Bands? I know you're going home this weekend saying, I got to be a buyer up here. On a weekly chart basis, what is this saying? It's saying take your money off the table. You're going to tell me it's going sharply higher, and I am going to tell you why it's not. Guess what? If you watch this, 13 videos, each maybe 15 minutes long, 10 minutes long, whatever they are, you see what I do. You're going to get charting software from us. It's all included in this course. It's under $100, by the way. Teaches you what to do, how to do it, and then I give you my morning paid subscriber videos. So you get another value that's $30 for that, approximately. All under $100, by the way. With the charting software alone, $60 a month. You're getting that back as freebies, because I believe I can teach you something. And I think it's going to stick with you. And I think you can do this. I think it's easy. So you're going to go through this. You're going to put in maybe an hour and a half, 2 hours learning. You'll review it again. I think you'll have it. It's that simple. And once you get it, if you're smart, you'll go, I don't believe it's not going to work. You got to become a believer by seeing it unfold as you understand it. How do you get to that point? Watch this video. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.